If you're looking for other names in tech to be bullish on, Nuveen's Chief Global Equity CIO, Saira Malik, joins us now with her picks in the sector. Saira, talk to us first about earnings. We've got Intel, Twitter, and Snap after the bell. Intel, you say that there's a lack of clarity around its strategic growth plan, but there could be a short-term case here?
I mean, Intel could be a story of a strong quarter driven by PC growth because people are continuing to work from home. But the question mark there is, how does that normalize as people start spending more on hospitality and entertainment? For us, the big question mark on Intel is what is their strategy to remain competitive going forward? We think we'll get a lot more information at their November Analyst Day. So we're waiting for that. And the question mark is, how do they get market share versus their peers? How are they going to spend their CapEx in order to become more competitive with their technology? All of those questions for us need to be answered before we're more interested in the stock. We're hoping to get that around November. Until then, probably more of a trading range for Intel, even though they may put up a good quarter because the forward looking is going to be a lot more murkier than we would hope for.
Right. And how do they beef up that manufacturing business?
Twitter,
Right. There's. Go ahead.
Yeah,
Julia.
I mean, they're looking.
Go ahead.
I was just saying, the Global Foundries potential acquisition, it's a multi-billion-dollar use of CapEx, but question marks again on whether that technology would be competitive enough for them. And there's a lot of operational risk around that potential acquisition and a lot of shareholder capital being used for that. So, again, we would need more information on all of that.
And shifting gears over to Twitter, I understand you're bullish long term. What are the factors you're going to be watching closely in this quarter's results, considering that last quarter there was such a disappointment both in the user growth and in the revenue?
Twitter, it is less so about the quarter. It's going to be another quarter of tough comps. They are lapping the second quarter, which was right in the middle of COVID, where people were very engaged in their phones and Twitter. But going forward, long term for Twitter, a lot of market share gains. They're making the right investments that could double their revenue by 2023. And we expect engagement in advertising to continue to pick up even as we come out of the pandemic. We have the Tokyo Olympics, a lot of live events coming up, positive for Twitter, and also just people continuing to be engaged in Twitter as we move forward. So we are positive on Twitter for the long term. Of course, this quarter could be a tough one for them again, but we would look at that as a buying opportunity if it was a difficult quarter.